Good morning and welcome to Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwago. Thank you for joining us. Well, we'll tee off with some business news, and the Central Bank has issued a regulatory framework for open banking in Nigeria in line with its mandate to promote financial system stability. In a statement released on Wednesday, the CBN says the objectives of the framework seeks to provide an enabling regulatory environment for innovative and customer-focused financial services, promote competition in banking and other financial services, and also deepen financial inclusion. Meanwhile, the financial markets regulator says it will continue to monitor industry developments and issue further guidance as appropriate.
And in the meantime, the International Monetary Fund has lent its voice to the Central Bank of Nigeria's directive for banks in the country to prevent transactions in cryptocurrencies. At a special virtual press briefing on the recently published 2020 Article 4 IMF staff report for Nigeria, the IMF president representative to the country, Ari Eisen, said the CBN's concerns that cryptocurrencies could be used for illegal transactions such as money laundering and drugs is justified. He also mentioned that many central banks around the world have taken similar policy decisions on digital currency transactions, as it remains a global concern despite its growing adoption. According to him, the CBN is thinking closely about its trade-offs and is trying to design the best policy in the interest of the payment system and sustainability of the financial sector. Concerning forex scarcity, the IMF official also called for the unification of the foreign exchange rates to make the management of foreign exchange more transparent.
Well, I was just wondering what came to your mind when you saw that story on
well, at the end of the day,
yeah,
the cryptocurrency has its, concerns, but so does every other asset class, you know. So this is new tech. Let's find ways to understand it and see how it can actually benefit
because
our system.
I believe that is what comes, one of the risks that come with digitalization. I mean, we're talking about digital economy.
Exactly.
And that's the way to go going forward. Everybody wants to be digitalized. Exactly. And so it comes with its own risks when you talk about cyber attacks and all of that. So again, it still boils down on looking at how we can actually tap into what probably might be the benefit there, because I think that's something we can actually benefit from.
Exactly. I'm not forgetting that some Nigerians actually make their daily bread trading these cryptocurrencies.
Absolutely.
Yeah.
Okay, the federal government has announced plans for the takeoff of a program tagged Green Imperative to address the challenge of agro-processing and mechanization in the country. The Senior Special Assistant to the President on Agriculture, Dr. Andrew Kwasari, told a news conference that the intervention is expected to boost food production as well as revive moribund machinery and assembly plant across the country. Let's take a listen.
This project has been in the making for quite some time now. We have reached a point where we are completely ready for its takeoff. And the Green Imperative will address two twin issues with agricultural modernization in Nigeria: provide mechanization and provide agro processing. And these two work hand in hand through what we call service centers. And these service centers will be created in each local government across the country to complement support to primary production through mechanization and value addition through agro-processing.
And President Muhammadu Buhari has approved the appointment of Dr. Orji Ogbonnaya Orji as the Executive Secretary at Nigerian Extractive Industries Transparency Initiative for a single term of 5 years. And this is in accordance with the provision of Section 12 of the Nigerian Extractive Industries Transparency Initiative established 2007. The appointment takes effect from February 19, 2021. Until the appointment, Dr. Orji Ogbonnaya Orji was the agency's Director of Communications and Advocacy. NAIT was established in 2004 as the key anti-corruption agency at the presidency, responsible for enthroning transparency, accountability, and governance of the country's oil and gas and mining industries.
And talking about the oil and gas industry, the Department of Petroleum Resources has warned depot owners against creating artificial scarcity by hoarding petroleum products in their facilities in some parts of the country. A statement by the DPR says the agency has received reports about their nefarious activities, which is causing untold hardship to Nigerians, while stating that the country has sufficient products which does not warrant such hoarding practice. It adds that the agency will not hesitate to apply appropriate sanctions on any depot found wanting in this regard, with a special task force set up to intensify surveillance and monitoring of all depots finds them culpable.
In the meantime, oil prices rose as much as $1 this morning, extending this week's gains and hitting a 13-month high as a cold snap sweeping Texas and surrounding regions, such at least a fifth of U.S. refining output and 1 million barrels of crude production. Brent crude climbed 93 cents to $65.27 a barrel, touching its highest since January 20th, 2020. U.S. West Texas Intermediate crude futures gained 76 cents to $61.90 a barrel, registering its highest since January 8th, 2020. Both benchmarks rose about $1 on Wednesday and have gained more than 6% since their last close on Thursday. Analysts say the unusual freeze hitting much of the United States could hamper crude output for days or even weeks. Oil prices have rallied over recent weeks on hopes for U.S. stimulus and as global supplies tighten, due largely to production cuts from the Organization of Petroleum Exporting Countries and allied producers in the group OPEC+.
Well, the current rise in oil prices, no doubt, is a plus for Nigerian government, but the consumers are already feeling the pains with an increase in fuel price here and there. Well, we will talk about this and more on the Commodities Market Update next. Well, Bolande Agbaje, one of the research analysts with Financial Derivatives Company, joins us now for Commodities Market Update. Good morning.
Good morning.
Good to see you again.
Good morning.
Well, one major news out there, PMS.
PMS.
Yes. That's what everybody is talking about. Well, yesterday we noticed that some of the marketers, particularly the independent marketers,
yes,
already selling at 170. All right.
Naira per liter, yes.
It's
a necessary evil, you know, if we're going to have a business that's going to be truly reflective of the market. You're seeing oil prices reach a 13-month high of about $65 per barrel. So that has to be translated, you know, in terms of costs as well, because landed cost is about 180.
We saw this coming anyway.
We did see this coming, and I think now we've seen that, you know, the independent marketers who import from abroad selling at 170, and then those that are still supplied by the NNPC are still maintaining, you know, 162 naira per liter.
But don't you think this is going to create some kind of discord? Perhaps what may be bringing about all of this is the type of deregulation we are having at the moment.
Yes.
Do you think it's time the government should just really let go and allow the market forces to determine?
Yeah, it seemed like the government had let go, but we're hearing news of the fact that, you know, these marketers and the unions and government are supposed to meet next week, and they're supposed to discuss a price mechanism. So it calls to question, is there really, you know, true deregulation? Unlike when you look at, you know, diesel prices in the month of January was an average of about 190 naira, but as of today we're seeing at about 235 to 240, which is truly reflective of, you know, the global market and what the domestic market price should be.
You see them setting a ceiling, some kind of ceiling?
If they do, then, you know, they're going against what deregulation should actually means.
Because at the end of the day, this would bring a lot of pain to the average
Nigerian.
Well, that is the way to go, I suppose.
Yeah, that's why I mentioned
how do we then get it right if we have to, you know, deregulate? And I believe, or I want to believe, that if we should deregulate appropriately, well, we should. Yes, the prices might go up, but before you know what is happening, maybe it will begin to taper. There will be a lot of competition, and then a lot of people would have the interest to actually invest
in
this
yes,
business.
definitely.
And when you have a lot of people doing the same business,
Yeah.
you'll find a lot of competition there, and automatically you'll find the prices.
Yes, you know, when there's true
Yeah.
and intense competition in the market, you see that prices would start to reflect, you know, their true value, and might not necessarily stay as high as it should, because, you know, there are more investors in the market, there are more players in the market. So generally, in the medium to long term, it actually favors the economy. You know, there'll be growth regarding, you know, the oil and gas sector, and you know, this avenue of, you know, whether we're deregulated, whether there's subsidy, can just, you know, end, and we can move on from it completely.
Yeah, but now recently we saw inflation numbers coming out, and it's still trending high,
going up.
Almost 17% now, and then we have food inflation above 20%, yeah. And then with this now,
Well, definitely,
and of course the core inflation has continued to grow.
Yeah, so with this, we expect that, you know, at least in the month of February, core inflation should, you know, at least inch up to about 12%. And that's just because, you know, we're seeing the impact, or the negative impact of higher PMS prices, which would definitely hinder, you know, or increase the cost of manufacturers. We're already seeing from the diesel side, so diesel power trucks will definitely be more expensive. And, you know, when it comes to PMS as well, the cost of, you know, using generators, because electricity tariffs are already very high. So when you look at, you know, a combination of all these factors, definitely core inflation, we should see the impact on core inflation and, you know, headline inflation before tapering down, you know.
Looking at oil prices, still trading as high as $63 per barrel. What happens if Saudi does not renew their production cut?
I don't think, at least for the month of February and March, I think, you know, Saudi's cut of about 1 million barrels per day will still remain. But there's that risk of, you know, whether they would, you know, remove these cuts, because we're happy that oil prices are currently trading at about $65 per barrel. However, Saudi has come out to say that it's not time to smile yet, because oil prices are extremely volatile. We're seeing the very, very low temperatures in the US, but, you know, some analysts forecast that by the end of this week, you know, these temperatures would be, you know, they'll start increasing. And the negative effect that we're seeing on supply, I think US production had been cut by about 30%, which is huge, about 3.5 million barrels per day. Demand is off the roof, and you know, it's literally too good to be true. But, you know, once the temperatures, obviously it's not permanent, once the temperatures, you know, change its course, we'll definitely see, you know, oil prices just inch down a little. So Saudi has come out to say that it's not time to smile yet. There's still uncertainty in the market.
Well, it looks like an irony there. Well, oil price at $65. Yes, it's good for Nigeria, but we're seeing the foreign reserves drop continuously, even as this morning. So when we should actually be having some kind of...
Should be seeing some...
Yeah, so obviously there's a lag between, you know, because you have to give time for them to actually sell, you know, these crude products, you know, and retrieve their revenues. But at the same time, it seems like, you know, there's more coming out of the reserves than what's going in. We've seen the pressure on the forex, you know, the issue of forex rationing. The demand is huge, and the CBN is struggling to, you know, meet this demand. And we're seeing the impact of this on our exchange rates. It's currently depreciated to about 478 naira to the dollar once again. We're seeing that divergence, you know, coming up again. The IMF had already mentioned, until you have this exchange rate flexibility, is when investors, you can reduce the exchange rate risk in the market. Investors can come in. We desperately need the capital flows, which is another source of this forex, to, you know, meet up the demand as well, so that people can just be clear on, you know, the direction of the Nigerian economy.
So GDP numbers are coming out later today.
Yes.
What are your expectations?
Well, at this point, it seems like we expect, you know, GDP numbers to just improve to about, you know, negative 1.5%, which is great. But, you know, obviously this calls to question what the CBN would do in return, in the sense that, you know, inflation is increasing significantly, and they'll probably look at ways they can, you know, increase interest rates to bring that down, just because, you know, they're seeing improvements in the GDP numbers.
Right, of course, talking about this interest rate, there we have continuously seen a fall in the equities market,
yes,
owing to the fear the interest rate environment
Yes.
in the fixed income market. So where does that leave us?
Well, it's typically when you see uncertainty in the market like this, most people are wary of what to do, when it comes to the equities market. There's high uncertainty in that market space. Nobody would necessarily want to invest until they're sure, they're going to get some good returns from it. And obviously, I think people are also moving towards, the securities that are being, introduced in the market as well, which seem to be safer option than the stock market at the moment. And also, the cost side of businesses would definitely have significant impact on their earnings, at least in the first quarter. So, most businesses would look into not necessarily investing in the equities market for those particular companies.
Right. Bolanle, it's interesting to note that even though we're seeing food inflation go up, but your slide says that that's on one of your goodies you have on your slide, prices of some food commodities are declining.
Coming down.
Which are those, and what's driving them?
Usually, the prices of the food commodities that would decline at this point would be the imported commodities, or the commodities that have imported inputs. So the likes of bread, wheat. We've seen wheat price of wheat increase significantly, and also the exchange rate impact on some of these prices. So even if you see lower prices globally, when you look at our exchange rate, by the time it comes into the market, it's actually more expensive for some of these companies. So these inputs, corn as well, when it comes to animal feeds, we'll definitely see some impact on them. But the general, low prices we're seeing in the month of February. The food inflation hike that we had seen was in the month of January. So we do expect that. Regarding food inflation, we don't necessarily expect to see a significant hike, just because on average we had seen most of the food basket, decline in prices. Not to say that the prices are still, they're still high on average compared to the year before.
And I hear that Cameroon has granted authorization for a new cement facility. What does this mean for Nigerian businesses like Dangote?
Yes, so it's great news. Just because we welcomed competition is great. For innovation and for just business growth generally. I think Cameroon, they're about to. Whatever investment that is done is supposed to, add about 1 million tons of cement into the market, which, is great. I think currently Dangote subsidiary owns about over 30% of the market share in Cameroon. So Dangote is still doing fairly well. I think Dangote has already obviously priced into or added plans, business plans to their, to their business, in the sense that they've obviously priced in the African Free Trade, agreement, and what they're going to do going forward when it comes to competition with, other cement producers across Africa.
And even now that they are beginning to export clinker. Something.
Clinker.
All right, thank you very much, Bolanle.
Thank you so much.
Thank you.
Great to see you. Right. All right, the Central Bank of Nigeria last week secured federal government's approval to set up an infrastructure company with an initial seed capital of 1 trillion naira. How will this help to bridge the infrastructure gap in Nigeria? That's our conversation next.
And President Muhammadu Buhari gave an approval last week for the setup of an infrastructure company, otherwise known as Infraco. With an initial capital of 1 trillion naira, it is envisaged that over time the entity will grow to 15 trillion naira in assets and capital. Moody's Investor Services in recent report indicated that weak institutions and governance frameworks and the low tax base in the country have hindered efforts to build infrastructure, creating a gap that requires at least $3 trillion over 30 years to close. And so how would this infrastructure company bridge the gap? Dr. Bongo, the Director, Center for Infrastructure Policy, Regulation and Advancement, CIPRA, at Lagos Business School, joins us now. Thank you for joining us, sir.
Thank you very much.
Yeah, so how would you describe the Infraco model as an intervention in infrastructure investment? What model of PPP is this?
Thank you for that question. I think the idea of Infraco started about 2 years ago, and last year, about April or May, that was when it's actually received some very strong support from the government, especially the central bank, to mobilize these funds for infrastructure investment. Now, I think this is the first time that our thrust towards public-private partnership in infrastructure provision in the country has really received a very strong boost with the setup of the infrastructure company. But it's also good for us to note that it is actually us copying what is happening in the rest of the world. Ours is domestic economy focused, but other places where we have something similar, like in Asia, it is actually called Infraco Asia. So Infraco Asia is headquartered in Singapore, and it is a donor-funded, commercially managed infrastructure development company, okay, which is exactly what we have borrowed. But what is different in our own case is that in the one headquartered in Singapore work not just in Singapore. Singapore is a small economy, so it's all across South Asia and Southeast Asia. You have countries like Bangladesh, Bhutan, India, Nepal, Pakistan, Sri Lanka, Cambodia, Indonesia, Laos, Vietnam, Myanmar, and Philippines covered. So we are talking about 12 countries that the Infraco Asia work in. But in our own case, we are looking at setting up something, let's say a small scale infrastructure company for the country. Okay, so that's that. But the intention is, of course, a good one, very laudable. And we think it will help because, again, if you look at what happens in Singapore, the Infraco runs on three major pillars, which is commercial viability, which means they invest only in infrastructure where they would like to mobilize private capital. So mobilization of private capital means that for every dollar that they invest, they make sure that they also are able to mobilize $11 of private capital into any investment. So if we have 1 trillion naira fund, so supposing that they run on the same principle as that of Singapore across the whole of Asia, by the way, then it means that for that 1 trillion will translate to about 11 trillion. Okay, if you add that, that's about 12 trillion of infrastructure investment in Nigeria, which is good because if we look at the statistics currently, Nigeria needs to invest about $3 trillion each year for the next 30 years for us to reach the level of infrastructure sustainability, the level of infrastructure that could power our economy and generate the kind of growth that will mitigate the population explosion that we are having currently, and then with its concomitant social unrest.
All right, Dr. Bongo. Now, not all infrastructure projects are bankable. How would such category of infrastructure be financed?
Great. So that is actually the role of government. That is where, because again, we have to look at what Infraco is supposed to do. So again, they operate on the pillar of additionality, commercial viability, of course, and development impact. So development impact will include, finding donor funds that operate, because not all donor funds are interested in commercial viability. So we have to look at economic viability as well. And again, that does not exonerate the government from its responsibility in providing the necessary public goods. So government will still be there to meet what we call the viability gap. So there must be the viability gap, which must be somehow, when you have the infrastructure fund, you need to have another component, which is the viability gap funding, which the government needs, again, to structure, whether within the infrastructure company or whether within the government itself, which will also mobilize, those kind of funds that seek economic impact, development impact. So, because that is actually what we critically need in Nigeria, because most of our infrastructure, projects not all are not commercially viable, but they are economically viable. They are very important. They create access, they create affordability and all of that. So that we have created an infraco does not mean that the government should not worry also about the viability gap funding.
Okay, Doctor, what are the main investment risks in infrastructure, and how can such risks be mitigated?
That's a big one. We know what the risks are in Nigeria, our inability to keep to contracts, to the terms of contracts. So we see things changing with each incoming government. So I do not know what the legal provisions or the legal contractual frameworks are going to be in place to really safeguard investments in infrastructure with the setting of this with this infraco, because infraco works essentially under the private market system. So it's not about government deciding to build a railway from Nigeria to Egypt. So no, it has to be justified commercially before infraco goes into that. Okay, so then the risk now is, how do you ensure that the investors who put in their money are able to recover and make the expected profit, which is their major attraction? Otherwise, they will not want to put their money. So that is where we need to work, because we have weak institutions. I do not know what we can do about that, because it's not about. I've actually spoken to this in the past. I think to one of the media, agency. So when they asked me about all of this, I said it is not just about borrowing what people. We always borrow, of course. We borrowed the mito from India. We borrowed so many things from other countries. Sometimes we even borrow without even changing anything, so that you begin to see the names of those countries where we copy those things. Copy and paste, yeah. So this infraco is also copy and paste. Sorry, if I may tell you that, okay? Because if you look at it, you can go online, search for infraco Asia, so you can see where we are coming from. So, but it's not just about copying and pasting. So, who are the people that will man this? It is still the same Nigerians. And then, they say that, the bad system will always ruin the best guy. So, people say we have great talents abroad. We have Nigerians doing well in the United States. We have Nigerians who have led this kind of stuff. But once you bring them down here, the system will subsume them. So that is the challenge. That is the challenge that we have. And do not ask me how we resolve that, because I do not know.
All right. Now, that brings the question of this issue of not many successes stories in PPP projects in infrastructure. Why is that so? And would infraco make a difference in this?
Again, it speaks to what I've already mentioned, which is our inability to respect contracts, okay? So that is the biggest challenge, okay? And that has to do with our, the nature of our government, okay? The nature of our institutions and our habits as individuals, okay? Here in Nigeria, we are we are highly indisciplined, lot of people. Okay, we know that. We do not keep to traffic signs. Let's start from there. Okay, or if there is a small traffic, people want to wriggle out of it by using the bush path, the pedestrian path. So we are highly indisciplined lot, and it is the same people that go into government. So they do not know what is law. They do not know what is regulation. They do not know what is respect for contracts. And then we see that play out even within the government of the day, from the lowest level to the highest level. So that is the biggest challenge that we have, okay? And because of that, no investor would want to put his resources in such sort of environment, okay? And that explains the only place or the only sector, that seems to have attracted some bit of PPP. And you can call it PPP because it's not really big, okay? And that is why, because the Asians understand what public-private partnership is, which you leverages project financing. So project financing is for big big-ticket infrastructure project, with huge capital demands, and which most times it's not something a small economy like Nigeria could carry. And so now you can understand the rationale why that of Asia is not Infraco Singapore or Infraco Bangladesh or Infraco Nepal. It is Infraco Asia. They are able to mobilize capital from all over Asia. And I'm talking about emerging economies, countries that are far bigger than Nigeria's, like India, as part of that. So they mobilize capital from all of these countries and to invest in large-scale infrastructure projects, okay? If there is only one country that can set up something like an Infraco and run it successfully, that might be China, because they have the deep pockets, okay? The Chinese central bank, we know, works extremely hard, to provide concessionary loans for infrastructure development all over China, and then the Belt and Road initiatives as well. So China as an economy has that capacity, but I do not know whether we have the capacity to do that. I'm not saying that this is not a step in the right direction. Of course it is, but we have to put everything in perspective. So it is the same kind of people that will run this. So I do not know. It's going to be a big challenge. So the only sector that we have, some bit of PPP working is in the housing. Okay, again, because the turnaround time is quite fast. Within 1 year, 2 years, you have completed all housing projects, housing estates. Okay, and then because of the huge demand, so it's going very well. But when it comes to roads, it's failure. When it comes to railway, it's a failure. Now, in power, we know the story there.
All right, Doctor. Looking at regulation now, the Infrastructure Concession Regulatory Commission, ICRC, is the regulatory body for the implementation of the PPP framework for infrastructure development in Nigeria. Would you say ICRC has failed in its mandate?
The question I think the proper question would be if ICRC really has what I would call a full-fledged mandate. It doesn't, because within that sphere you have BPE, you have the Ministry of Finance, and then you have ICRC. I mean, there are so many competing entities for that territory. Okay, so when we talk about ICRC. But it's not a sole regulator, because I know that every day it is between the ICRC and the Bureau of Private Enterprises, or what, BPE. So there is still that torso. So things are not clearly defined. Okay, who is really in charge, and then that means with that kind of situation, we cannot begin to say, okay, ICRC has done this or hasn't done that. But the little they are doing, okay, given the operational environment, auditing business cases, outline business cases, and full business cases, and giving certificates to proceed, and all of that. And it's all for small projects, little projects, not for any big thing. Okay, so the operating management, operating framework depends again on the legal backing that they have. Like I said, this is a country of very weak institution and respect for statutory, provisions.
All right, thank you very much, Dr. Bongo. Well, good policy, good programs. We'll see how it goes eventually. We'll keep monitoring that. Thank you. We do appreciate your time always, and enjoy the rest of the day.
Thank you.
We now turn to the market with INI. Well, it's still the bear at the equities market, all because of the fear of the interest rate environment in the fixed income market. Yes. That's not looking good for those who want to invest at the equities market.
Yeah, well, as you always like to say, a lot of investors are waiting to see. It's very cautious attitude from investors at this time, especially, okay, like today we're expecting the GDP figures, so we'll see how that will affect decisions at the equities. But I mean, it's still profit-taking. It continued yesterday, and well, we see the All-Share Index, of course, in the red, following all of the wait and see and all that, 0.07% down, and leaving the equities cap at just about 21 trillion naira. And then the volumes have also gone down. The deal has gone down about 400 less than the previous day. 4,087 value is down. The equities market is not looking attractive at this time. Okay, but in the sectoral performance, oil and gas is still doing very well. We have Mohammed Jamiu, the head of securities dealing, APT Securities and Funds, to tell us what's going on in the market. Good morning, Mohammed.
Good morning. It's a pleasure to be with you.
Good to be with you too, Mohammed. What was going on? Okay, there's profit taking, and then we saw that Boa Cement actually felt like the biggest pinch yesterday. What's going on?
The market is showing a kind of resilience to further downfall in the market. So if you look at year-to-date, week-to-date, from Monday to Wednesday, we will have 3 trading sessions. And if you look at what the gain we had on Monday, it even make the week today return to the positive. So we have a situation whereby the market is displaying a kind of resilience. You see, on Monday we have the market breadth remain positive on Monday and on Tuesday. Unless yesterday that we have market breadth to be negative. We expect that markets in the week supposed to close in the positive territory. And as I did today, we have a situation whereby markets still remain positive, looking at the week today in return.
So we're expecting a positive end today?
Exactly.
Wow.
Both today and tomorrow we are expecting it.
Oh, okay. Thank you so much, Mohammed Jamiu, for giving us that analysis. Okay, so in the sectoral performance, the oil and gas has been in the green since the beginning of the week. Seplat led for 2 days. So yesterday they added 0.20. Now going to the unlisted securities, the securities index lost 1.79%, and the market cap ended at 521.67 billion naira. Volumes in 3 deals, we had 26,850. And then in the FG bonds, well, some of the investors sold off their July bond yesterday, but so we had 20 deals in the federal government bonds. And, well, that went to 13.84 billion naira. The treasury bills also had 9 deals, not very, in the CBN bills, none at all, as has been since the beginning of the week. The open market operations also. Well, Chimi, this is how the markets are looking at this time.
Okay, Jamil gave us some hope there. So let's see what happens at the end of today. But mind you, the GDP number will be released today. Well, that would come just, I think, 30 minutes before the market closes. So I don't think that would really have
we'll see the impact tomorrow.
Yeah, so we'll see how that goes. Okay, we'll take a quick break. When we come back, we'll do an opening call to London. Okay, for updates from the street of London, we have Simon there. Good morning, Simon. Well, after yesterday's inflation data releases, the Chancellor, Rishi Sunak, has thrown his weight behind a cautious approach to reopening the economy. What will this mean for his March budget?
Morning. Yes, in the past, Mr. Sunak has been keen to open the economy pretty fast and pretty hard, and he did last summer with the Eat Out to Help Out scheme to encourage people to get back into restaurants and pubs that have struggled so much, to try to help the hospitality sector. This time, though, he believes the best thing for the economy is to avoid a kind of stop-start reopening. So along the same lines as Boris Johnson, the Prime Minister, he doesn't want any more lockdowns beyond this one. It's thought the budget will therefore be dominated by measures to protect jobs and shore up support for the hardest hit sectors. Sources say the budget is likely to echo Mr. Sunak's autumn plan for jobs, and that means extending key support schemes such as the furlough scheme and the business interruption loans, which are due to close at the end of the month. The immediate priority being a decision on government support for workers and whether or not to phase out the furlough scheme. So people will be looking at that come the beginning of March.
And Jaguar Land Rover has announced plans to cut about 2,000 jobs from its workforce over the next year. It comes after the car maker confirmed its Jaguar brand will be all electric by 2025, and that will it will keep all 3 of its UK plants open. What then will this mean for UK workers?
Yeah, big news this. The company has said it had started a full review as it prepares to become what they describe a more agile organisation. It comes, as you said, after the car maker confirms that its Jaguar brand, big brand here, will be all electric by 2025. That follows other car makers following suit, and it will keep open all its 3 UK plants, which is good news for UK workers, of course. The losses from its worldwide workforce will not affect manufacturing staff here, but the company said it was too soon to know how many roles would be affected in its home UK market. Specifically, that means headquarters in Coventry, plants in Castle Bromwich, Solihull and Halewood. In a statement, the firm said it had to make every possible efficiency, and that's after they closed production for several months, a couple of months ago. So we don't yet know exactly how many UK workers will lose their jobs, but it looks like it's going to partly come from its worldwide workforce.
And in another corporate news there, Ryanair has lost its court battle against aid granted to rival Air France and Swedish carriers. What more are you learning about this?
Yeah, so the General Court has said that EU rules were not broken when the airlines received bailouts. Airlines have, of course, been particularly hard hit by the coronavirus pandemic, with much international travel either banned or restricted for long periods. Ryanair says that the help was unfair, and they criticised the French scheme, which allowed airlines to delay paying some tax to the French Treasury, and a Swedish loan guarantee scheme. The group said it was giving the firms unfair advantages. Ryanair has filed more than a dozen lawsuits actually against the European Commission and various airlines over that kind of state aid grants by European governments. The company says they will appeal this ruling to the European Court of Justice, so it remains to be seen as to whether they're going to be victorious in this legal battle.
All right, Simon, thank you very much. Okay, I'm sure you'll give us more updates later in today when you speak to Ladi on our afternoon show.
Will do, thank you.
And to the crypto market, Ladi, where is BTC dominance at the moment?
Well, BTC dominance went down a bit, 61.14%. The market is not looking bad, even though I'm still kind of nervous because Bitcoin has surged so much this year, and obviously there will be some kind of correction. I don't know when, and I don't know by how much. Market cap stands at $1 trillion, 24-hour volume, $193 billion, up 5.42%. Bitcoin price at 8 a.m. this morning, $51,970, up 4.37%. 24-hour volume, $80.023 billion. Let's look at the top gainers. Last time I talked about exchange tokens season, and it looks like we might just be having that because the 3 top coins here, BNT is Banco, that's a decentralized exchange, PancakeSwap, another decentralized exchange on the BNB chain, and then we have BNB, Binance Token, the biggest exchange in the world currently. All of them trading at BNT trading at 44%, $5. PancakeSwap, $10.78, up 36%. So it's possible we might have an exchange token season. Anyway, let's talk to Solomon now. Hello, Solomon. Hello, Solomon. Okay, maybe we lost Solomon there. So as I was saying, it could be a good chance to, search the market for some exchange tokens that are not yet pumped, as they would say. So right now we have Zen Horizon trading at $80, up 36%, and XVS $65, up 36% also. And the top 5 losers, we have CHSB at 83 cents, down 2%. Not much, in crypto world. Normally, when it's down over 10%, then you have a problem. And we have Dogecoin. Dogecoin, it seems the Elon Musk pump is actually wearing off. It's down 2.73%. It got to a high of about 8 cents, and now we've halved that at this point. And so PAX there, that's one of the stable coins that's going down. So it looks like Bitcoin is actually still ranging at this point. So we might be getting some plays in the alt market. And the funny thing is, in the news, we saw that one of the biggest asset managers, BlackRock, is exploring buying Bitcoin. As we saw, Elon Musk bought $1.5 billion worth of Bitcoin. Hello, Solomon. Do we have Solomon now?
Yeah. Good morning. Good morning.
Solomon, great to have you. Great to have you. So
Yeah.
I've been getting a lot of questions. People say they don't want to buy one Bitcoin because they feel it's so expensive. But tell me, how can I buy a little Bitcoin and multiply it?
Okay, there are easy ways, but I don't know why so many persons just want to go for one full Bitcoin. What I advise most persons to do is use dollar cost averaging, known as DCA. You can just take 5% of your earnings every month and you put it into Bitcoin, and that way it's easier. You'll be surprised what you would have gotten after like 6 months to 1 year. So that's like the easiest way outside trading, because I don't really advise most persons to trade because so many traders don't really make profits. It's something that you need a special skill for. You need a guide before you can be able to make good profit from trading.
So basically, if you want to trade alts now, you would have to maybe find a good entry and an exit, right?
Yeah, exactly. And that is not something that you can easily do for newbies, because most of these persons that want to get Bitcoins, they are newbies. So the best way, if you ask me, is just use DCA, dollar cost averaging, and that way you can purchase little amounts every month and you can accumulate it on the long run.
Okay, and I see DeFi coins are trending again. It's all over the place.
Yeah.
DeFi. How can new traders find the right DeFi coins and actually make some profit?
Yeah, the right DeFi coins are actually the projects that actually do what DeFi is all about. That's decentralized finance. And you're talking of like Balancer, Synthetic, and Uniswap, and you have Banco and Link and some others. So they are actually very good DeFi projects, but the best way and the best entry is when you get in early, like immediately after the IDO or during the IDO. That way, within 2 months, you can be 10%. You can be about 1,000% up in profits. That's like 10x.
That's an incredible
that's like
number.
The easiest way.
All right, Solomon. Thank you so much for coming on the show as always. Really appreciate you.
All right.
Thank you. Enjoy the rest of your day. So, Chimi, you see it there, still looking okay.
Well, with
as I
Bitcoin,
say,
yes,
very risky market.
I guess,
very risky market.
Well, the regulators have told you that. Very risky. So, but if you have the heart, it's your business to go into it. But it's interesting to know that I really don't have to have about $50,000 to buy one Bitcoin. So I can actually take it in fractions, depending on how much I have. But it's only if you have the heart to go into that.
Because some analysts actually projecting a $1 million Bitcoin. That means 0.10 Bitcoin will be worth a lot of money at that time, but who knows?
Well, for those that have the patience and have the heart, so if you have the patience to wait, is actually a long-term thing, I guess. But for institutional investors who are going into that, remember, one of your guests yesterday said, for the Bitcoin, it's mainly institutional investors because the money is quite huge.
Exactly.
And for common people like you and I, maybe look for the fractions to buy. All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.